What's going on, everyone? This recent uptrend has been beautiful, but today was quite the chop fest as 70% of the S&P 500 actually closed down in the red, and the market is flashing a weird but honestly very useful signal right now. On top of that, Boeing signed their largest deal ever today, and we have some important data set to release tomorrow, so definitely make sure to stick with us. There's a lot of money to be made in this market if you know where to look, and we have a lot to cover today. So Tom, let's jump right into it.
Yeah, the S&P 500 ended up going flat today. We can see it did not break above the high from yesterday, which is kind of surprising, right? Given all the nice bullish price action lately. But I will say it did hold its ground well. It held some support. It didn't necessarily fall too much. Just like I said, went very flat. It did close up in the green very, very slightly. Going back to the heat map, some of the tech stocks kept it alive. NVIDIA had a 4% day, which was nice. Google was up 3.6%. And even Tesla moved up 4% today, so there was some positivity out there, but the market is getting a little bit slow here, Mike. And as we start to look at, like, let's just say the market overall, we've been in a really good uptrend lately. We can look at the SPY here, zoom out on a daily chart and say, okay, the SPY bottomed out around 482. We're now trading all the way up around 588. We're about 4% away from the all-time high, which is pretty insane to say. I can't even believe I'm saying that, Mike, because just a couple weeks ago, I think people thought the Great Recession was happening again.
Honestly, though, and that's just how quickly sentiment changes in a volatile market like we're in. And I know that there has been a lot of talk, especially from retail traders, mentioning how this rally feels a little bit rigged. And I understand what they're saying, but I think what's very important to be aware of in markets like this one is that, let's say, for example, over the past few weeks when we saw this giant uptrend, there are a lot of factors playing into this. Of course, the recent positive trade deal news definitely brought in a lot of positivity. Of course, you always have the normal buying that's happening just from, you could say, institutions, stock buybacks like we covered yesterday, and just general bullishness. But of course, what we have seen with this crazy recent uptrend is a record amount of hedge fund short squeeze activity. So it's not like an all-time record, but this recent short covering from hedge funds that we've seen is truly historic. We are seeing a lot of hedge fund short positions just get squeezed out, where even if they don't want to close these short positions, they kind of have to just for risk management purposes. And when they close these short positions, it of course adds a lot of extra buying pressure onto the markets that we wouldn't otherwise see.
Yeah, and a lot of people that might not understand what we're talking about might make some sense of this if we go back to the old GameStop situation, right? Where we saw some short squeezes start to happen, and obviously GameStop went pretty insane during that time, right? Now that was a pretty parabolic short squeeze situation, but obviously what we're talking about is more of on a macroeconomic level, and maybe let's say with the SPY and with maybe some indexes and things along those lines. But nonetheless, Mike, it's pretty interesting though to see the shorts covering at such a high pace. Of course, as we can see over the past couple of years, there has been periods where shorts have popped up and we've seen them covering at pretty high marks, but it's pretty far and few between. So it's definitely something very interesting here, and it makes me think that they might be also seeing a dynamic shift, and they might be very worried, let's say, of this uptrend continuing. And if the uptrend continues and they don't cover, they might get ran over, right? So like you said, they're kind of getting forced to cover here, and it's a situation that could just add more buying pressure in. But as we're going to talk about, though, the market overall is getting a little bit overextended, so be a little wary of the short-term uptrend.
Exactly. So this recent uptrend has been amazing, and it's a lot easier to make money playing the bull side of things, as always, because the stock market rises a lot more than it falls. But that doesn't mean that you should get sucked into the bull thesis, because like you mentioned, there certainly are a fair amount of pullbacks that we do see, and we actually have some very interesting data right here that basically shows that we are seeing quite a bit of stocks in the Nasdaq reach overbought territory. And one thing that I thought was especially interesting and useful from this data is that a week after this happens, ever since COVID, the stock market has almost always pulled back. And I think this is important to pay attention to because, I know a bunch of people just made a ton of money off of this recent uptrend. And while I love to see that, I would, hate to see everyone give it all back with a pullback. So, in addition to yesterday's pullback data, this data also reinforces that, it's not unreasonable to see a pullback. So whether you are someone who believes in this uptrend or someone who's against it, you have to be willing to adapt either way.
100%. And whenever I see this, it definitely worries me because I know a lot of people have been marrying this bull side here on this move. And trust me, I don't blame you. It's been an awesome move to ride to the upside. Don't get me wrong. But whenever we start to look at some of the data and we do go back to like the SPY chart and just the Nasdaq chart in general, we have seen a lot of overextension in the short term, especially out of a lot of the tech stocks. And I know that this data specifically is looking at the Nasdaq or the QQ or the Nasdaq 100, of course. And the QQQ can be pretty much associated to that. We can see it's been moving up a little bit better than the SPY, in my opinion, whereas the SPY, we get a little bit more like doji candles, more flat days, whereas the Nasdaq has been seeing more of that upside potential, like I would say, like with a lot of those tech stocks. But Mike, like whenever we look at the market here, there are some big resistances coming up. I mean, as the market rises, there's going to be a point where we're like, okay, where are we going to get a slowdown? And like, if we go to other crazy uptrends, like let's just say in the Nasdaq, there are periods of pullback. Like, let's just say that there was this massive uptrend in 2024. I know everybody remembers that. A lot of people enjoyed some great gains. There were some periods where we had some pullbacks for a few weeks at a time.
Yep, and like another thing too is I think a lot of like the sentiment can be gauged just by looking at the big tech stocks, because if we go to the heat map, like I said, we saw 70% of the S&P 500 in the red today, but the S&P 500 technically still closed in the green, and it was carried by stocks like Google, NVIDIA, Tesla, AMD, and others. So like if you ultra focus on, these stocks, maybe you throw Apple and Palantir and Microsoft in there as well, that can be like a great gauge of like how the market's trending. And honestly, I see a ton of value really looking at those stocks to get an idea of how the market is trending for the day, because when NVIDIA is up 4% on the day, that's a tough trend to go against.
It definitely is, and I know we've talked about NVIDIA a lot in the short term, Mike. Going back to the daily chart with them one more time, they are starting to get closer and closer to some key resistances. I couldn't believe that they hit 135 today. It seems like 140 is inevitably coming up in the future with NVIDIA, but as they get towards like 140 and 145, I am going to be worried about that next resistance coming up. That's going to be a big one here, but I really do like to see this uptrend continuing in the short term, and for tomorrow, of course, I will go into it with a grain of salt, but NVIDIA is exceptionally strong. I know Tesla had some good news, and AMD had some good news as well. And Mike, they actually had a $6 billion share buyback that they announced today, and they previously already announced share buybacks that still had $4 billion left, so now they're totaling $10 billion in buybacks here, which sounds great. Their stock closed up 4.6%. It might not have had that sexy end-of-day close like NVIDIA did, bursting out to a new high, but either way, a 4% move, very respectful here, and I'm definitely going to keep watching them to the upside as well. I know that they're NVIDIA's competitors, but they're starting to break out in the short term as well.
Yeah, advanced money destroyer slowly turning into advanced money dispenser again, which I personally love to see. The stock has been selling off quite a bit over the past few years, and I think it's at a pretty solid level for like a long-term hold. But again, that is a long-term outlook. Anything can happen in the short term. I really do like this news of an extra $6 billion in buybacks. That'll definitely help quite a bit. And the only thing that I don't love here is that the price action, like you said, especially towards the end of the day, wasn't like too amazing, but overall, great bullish activity, and I certainly do think it is worth keeping on the radar for tomorrow and the rest of the week.
Tesla Inc. shares have surged 46% since late April, adding $350 billion in market cap. Key factors include strong automotive margins and a planned ride-hailing service. Despite challenges, Tesla's future hinges on autonomy initiatives, with a potential $90 billion market opportunity in the U.S. The stock rejoined the trillion-dollar valuation club, although it remains down 8.1% year-to-date. Denmark's economy is thriving, largely due to increased foreign demand for Novo Nordisk's diabetes and weight loss medications, Wegovy and Ozempic. The company's sales now account for 8.3% of Denmark's GDP, up from 1% in the early 1990s. Nike Inc. has struggled in 2025 with shares down over 17% due to weak demand and tariff impacts. However, Wells Fargo raised its price target to $60, reflecting optimism from lowered tariffs and updated estimates. Recent announcements have provided some relief to investors.